Hi guys, Dan and Kai here from Crescent Mortgages, again coming to you with some of our FAMQs, frequently asked mortgage questions. Today's topic is
loan to value.
Loan to value. Before we get started, as always, if you could like the video and subscribe to the channel, it would be very, very welcome, as the channel is a baby. And if you have any questions, there should be a banner popping up on the screen with our... Is it a link?
No, it's not clickable.
Do we not qualify for that yet?
At this point of filming, we don't have 1,000 subscribers, so we can't make
the
link clickable. It's in the bio, and the details are on the banner, wherever it is. That'll
take you through to the website, and then you can send us a message. We'll get back to you. We'll have a chat and go from there. So, I think this is the 4th attempt of filming this video. So I think the first attempt was actually the first FAMQ we did, and we thought it was quite good, but we watched it back and actually we were quite excitable, weren't we?
Yeah.
You were a bit too jokey,
We're finance people, we had to calm down.
So hopefully 5th time's a charm.
Oh, this will be good.
4th time's a charm. So let's try one more time. Kai, what is loan to value? No, I'll go.
You do this one,
right. So loan to value is your mortgage as a percentage of your property value. So a simple example, if your property is worth £100,000, not when you originally bought it, but the value today, and your mortgage is £90,000, then your loan to value will be
90%.
Very good. And again, if your property is worth 100,000 and your mortgage is 56,000, it's a hard one, then your loan to value is
56%.
Okay, so hopefully that's kind of an example which really explains kind of how it works. If your property is worth 200,000 and your mortgage is 100,000, your loan to value is 50%, and so on. So
what about 68,000 value and a 51,000?
Oh my goodness! Do you know that?
75%.
Oh yeah, God, you've really made me look stupid in front of our 6 subscribers,
including us.
Yeah. Right, so that's what loan to value is. How does it impact people?
So a loan to value, you want it to be lower. So 50% is better than 60%, for example. The lower loan to value, the better, and you get better products generally the lower your loan to value is. The example I just gave isn't the best, because at 60% is the best threshold. Anything lower you don't really generally benefit from.
So your loan to value can be lower than 60%, as we mentioned. Property of 100,000, mortgage of 30,000, your loan to value will be 30%. But you'll find that anything under 60%, you will be eligible for generally the best interest rates. Exactly. Occasionally a lender comes in and gives slightly better rates at 50% loan to value, but 99% of the time, under 60%, you'll be eligible for the best rates.
And they come down in 5% increments generally.
Yeah, so the highest loan to value would generally be 95%, which means if you're buying, you would just have to put down a 5% deposit. But not every lender does that. A lot of them require at least a 10% deposit. But for every 5% on top, you'll start to look at better interest rates. Not just better interest rates, actually.
No, yeah, that's the main one for a lot of people. But yeah, the criteria loosens, doesn't it? So you will find lenders maybe more generous with how much they lend, or if you've got some other maybe criteria issues, they'll be more lenient on those. And it does, the better the loan to value, the easier it gets for everyone.
It's better for everyone. And the credit check at high loan to values is quite strict as well. So if your loan to value is 90 to 95%, then the credit check can actually be quite strict. But the lower it goes, the more lenient that will become as well.
How can we impact it?
Yeah, I mean, the 2 main times really, I mean, if you look at the 2 times the 2 times your mortgage will either be a purchase or a remortgage. So if you're purchasing, really the main thing you can do to determine your loan to value is put down a bigger deposit. Now, of course, if you don't have the money, that's not possible. But if you put down a bigger deposit, that will improve your loan to value, which will then improve your interest rates and possibly the criteria that you get. If you're remortgaging, I guess what could someone do when they're remortgaging?
Well, obviously, if you can improve the value of your home, which is easier said than done, but if you're about to do renovations, before, just after you remortgage, perhaps maybe bring them forward if you can. That could have a benefit.
Again, not always possible, but if you do the renovations first, the value of the property should go up, which helps.
But the main one is probably just paying a bit off if you're on a threshold. So again,
can you give them an example?
Yeah, I'm going to give them an example. I'm going to use round figures this time.
Yeah.
So again, if we said you had a mortgage of £61,000 on a property of £100,000, your loan to value is currently...
Sorry, I switched off. What was it?
£61,000 on a property of 100.
61%.
There we go. It may be that if you pay £1,000 off to get to 60% loan to value, you have a better set of products available, and we, or any broker really, should be able to
especially us,
mainly us, should be able to tell you if it's worthwhile paying off £1,000 to save whatever the interest rate or payments are. But yeah, there's certainly a conversation that your broker should bring up, but feel free to bring it up yourself, just in case your broker's incompetent. Yeah,
which hopefully they're not. But I mean, of course, and as Kai forgot to mention, if you don't have the money in your account to pay off the £1,000 or however much to get you to the lower loan to value, it's not the end of the world. But if the money's just sat there, if you've got savings that aren't being used and £1,000 or £2,000 or however much improves your loan to value and therefore your interest rate, then again, it's a conversation you can have with your broker to decide if that's the right way to spend your money and spend your savings. I think we've got through that one all right.
That one felt better.
Yeah, I enjoyed that one actually.
Yeah, like and subscribe, and
as always, like the video, subscribe to the channel, and you can hit the link in the bio maybe. We don't know where the link's going to be, but if you hit it, it will take you through to the website. You can drop us a message, and then we'll come back to you and we can have a chat about your mortgage and answer all of your questions. As always, we are fee free. Have a great day.
See ya.